Hi, I'm Justin Bergner, Portfolio Manager and Industrials Analyst at Gabelli Funds. I wanted to discuss the Timken Company, my best idea for 2024. Headquartered in Canton, Ohio, Timken manufactures engineered bearings and industrial motion products globally for a variety of industrial end markets, with a 2/3, 1/3 split between bearings and industrial motion products. Timken is a sleep well at night short cycle industrial stock. Over the last 5 years, the stock has compounded at a 19% annualized total return versus 14% for an index of industrial stocks. We expect its stock to outperform by a similar margin over the next 5 years, reflecting its ability to outgrow peers, to improve its industry-leading margins through operational excellence, and to deploy capital effectively. The company also benefits from having a very weak set of competitors in Europe and Japan. Timken outgrows its peers by 100 to 200 basis points organically by consistently pivoting to higher growth markets and pursuing adjacencies. It largely exited the commoditized automotive bearings market 10 years ago and invested in renewables, now 10% of its revenue, with a leading position in the main shaft bearings for wind turbines. Industrial motion, which includes chains, belts, gears, and automated lubrication systems, and is often complementary to bearings, was patiently built up through over a decade of M&A. Timken's competitors are either saddled by automotive exposure or are slow to evolve their end market focus. Timken's operational excellence is showcased by continuous improvement, whether plant consolidation, low-cost manufacturing in countries like Mexico and India, or pricing excellence. Timken generates near 20% EBITDA margins versus what we believe would be closer to mid-teens for its best competitor SKF on an apples-to-apples basis. Timken has added consistent value through balanced capital deployment. It has spent $900 million to reduce its share count 16% over the last 8 years, while deploying $2.2 billion for strategic synergistic bolt-on acquisitions. It has simultaneously passed on large expensive deals like ABB's Dodge Business and Ultra Industrial Motion. So why is Timken a best idea for 2024? We see industry leaders being re-rated upwards more broadly, a process that has been ongoing for Timken over the last 3 years but hardly run its course. At $82 per share, Timken trades at 12 times 2024 cash EPS and under 10 times EBITDA. Timken stock underperformed in 2023 as the ISM Manufacturing Index and global PMIs were in contractionary territory and distributors destocked, which is likely coming to an end. For us, best idea means best risk-adjusted return, and here Timken's quality attributes stand out. To further that point, 40% of Timken sales are to distribution and end users, mostly aftermarket, with technology now limiting the peaks and valleys of destocking and restocking for distributors. We expect to see a $100 Timken stock in the not-too-distant future.